Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And guys, today has been the day after weeks of seeing so much volatility, getting in and out of positions for break even or a couple $100 trades. We finally have covered some good profit, took a new position that we're already up on. So in today's video, guys, we are going to be talking about the best swing trading strategy that you guys need to be doing to make money consistently from trading in the stock market. This is going to be my full playbook. I hope you guys all enjoy it. If you do, hit that like button and subscribe. And if you guys want to elevate your trading game and learn more about trading, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. We teach you honest strategies that I've learned over the past 7 years. So check it out down below, and you guys can get 51% off by using code TRADER. Code TRADER, only 2 spots left for that code. So if you want to elevate your trading game, check it out down below. And guys, let's jump into this here. So we're going to turn to the computer and look at these trades. So today has been an absolute fantastic day here. You know, yesterday we took a trade on Home Depot. So let's talk about our entry point, and then we'll talk about the new position that we took today. So Home Depot, before we ever buy a stock, you need to have a set list of criteria. So for me, the first thing on my list is a stock on an upward trend, right? And you guys can see Home Depot has gone from, pretty much like the 317 mark all the way up to 437 in about 6 months. So it establishes this upward trend. A lot of traders don't do this, which is crazy to me. They find a stock on a downward trend, and they try to buy the lows and, think that it's magically going to recover, when in reality it's just better to buy a company that has buying pressure, an upward trend that is sold off down to some level of support. So this brings me to my second thing on my list is going to be support. So you guys can see here this red line. Look in the past, right? It hit it in the past, and what happened? Buying pressure. Hit it in the past, we had buying pressure. Now, when the stock falls below it, it acts as resistance. So it hits it, we have selling pressure, right? Hits it, selling pressure, selling pressure. So we know there's either support or resistance. How do you know the difference? Well, very simple. When the stock is above it, it will act as support, right? 1, 2, 3. When it sells off down below it, it'll act as resistance, right? So now here, that stock is on an upward trend, sold off down to that 200-day moving average line, which is a support. Now here, the next thing I look at is the RSI. At the time of purchase, the RSI was trading for a 29, which the last time it was trading for a 29 was back right in here. And what happened right after? It went from 381 to 430. So now here, as we look at the stock here, we go, okay, the stock's on an upward trend. It's sold off down to that 200-day moving average line, which is a heavy support for the stock. The next thing is it's undervalued on the RSI, which is a momentum indicator. What else do you look for? So before we jump into the next list here, make sure you guys have a broker that offers these tools. The broker I use is Moomoo. So this is the broker you guys are looking at. I'll put a link to them down below. You guys can get up to 20 free stock just by signing up with them. So check them out. It's completely free. Sign up. All right. So the next thing here we look at is a different time frame. Looking at several different time frames is so incredibly important, because one time frame can be telling you one thing, and then another time frame could be telling you another. So we look at, or at least I look at, the hourly, and then occasionally the 4 hourly, and then occasionally the 30 minutes, right? It all depends on the approach here. So we'll just look at the 30-minute here. What do we notice? We notice that it has great tendencies of hitting this blue line, which is a 90-day moving average line, and getting resistance, right? You can see right in here, it's sold off down below it, right? If we zoom in, you guys can see, hits it, we have selling pressure, hits it, selling pressure, hits it, selling pressure, hits its selling pressure, hits its selling pressure. So this is what we call a downward trend line. Now, this downward trend line has that great resistance, right? So it hits this line, hits that moving average line several times. So now here with trading, one of the most important things you guys can do as a trader is to be prepared, right? Be prepared, like the Mufasa song for those of you that saw it. So now here we threw an alert above this trend line because we wanted to capture a breakout, and that's exactly what we did. The stock popped up here, and this is we had a really nice average cost. We'll go ahead and we'll show you guys our swing trading journal here. So this is for the month of February. We're up about $2,700, but more importantly, our average cost is 388.27. So it popped up and we got literally in on this position almost immediately. And that's why being prepared is so incredibly important, so incredibly easy to do is just to be prepared. So the next thing here we did is I went ahead and I looked at another time frame. I went ahead and looked at that hourly chart. So I thought this was my breakdown. Okay, we can get in, at that above that trend line. Keep our stop loss relatively tight, about 2 to 3% from its current price. Now, I originally thought we could get a push up to that 418 mark, which would give a nice risk and reward of about 3 to 1. So, meaning we're risking $1 to make $3, to make $3. Now, for those of you that don't realize how important this is, if you guys are starting out with let's just say $1,000, if you find a stock like this, let's just say 50 times over the course of a year, so it's a little less than, once a week, risking that 2% with a 3 to 1 risk and reward. Now, you might be saying, well, Carter, I probably have to win 70, 80% of my trades. No, even if your win-loss is 50-50, guess what, guys? You've more than doubled your money. Imagine this, 40%. So you lose 60% of your trades. Guess what? You're still profitable. You made $700, almost doubled your account. Now, this is getting crazy because now you've lost 70% of your trades. And guess what, guys? You are still profitable with good risk management. This is why having two things. This is why having a broker that offers this tool where you can plan out your trades is so incredibly important. The next thing, this is why understanding your stop loss, your target price, but more importantly, where you're going to get sell off. So for me, looking at Home Depot, I knew the volatility we've seen just out of the general market. So I pretty much sold about half of my shares at about $400. We were watching it. For those of you that were live with me, we're literally watching it climb up 398, 399, and I was just waiting there. And then popped up to over 401, but we were able to get in near and around 399.90, which is a really good average sell. So now here it's sold off. Now my thought process was this: okay, if it can hit and establish a move on this 90-day moving average line, so this support line right here will continue to hold. And watching it popped up after hours, but look, it could not break above that 200-day moving average line. So it hit it and then started getting selling pressure, and we just sold out of the position. We're hoping to get a move past that 200-day moving average line, but we just sold out. And this is what I want to get at, is during times of volatility, during times of not even a recession, but just like volatility in the market where we're seeing the S&P 500 sell off. We're seeing all of these other indicators establishing sell off. Guess what, guys? We're going to take profit early and cut our losses sooner. So yes, during most of my trades, I probably would have continued to held this position, but no, during times like this, I personally sell my shares. I get out and I go, let's just move on to other opportunity. We made about $700 bucks off that. Awesome. So now here, let's look at another stock here that we got in on. Ticker symbol ONON. ONON, you guys will notice it's a very similar approach. So the thought process that I had was this. Okay, one, we definitely went a lot lighter than normal, meaning we did not go heavy. You might be saying, Carter, why? Well, we have a very important earnings report today, Nvidia, which in my opinion could be holding up part of the market. So we did not go heavy. I always thought you always can buy more later if it pops up above this, 200-day moving average line. So let's break down this trade. Looking at the daily time frame, we have that upward trend, heavy support here on that same red line, right? Boom, boom, establishing good buying pressure. Okay, the RSI was trading for a 27. The last time it was trading for a 27, let's look, was all the way back and here, all the way back in September of 2022, where the stock went from $15 to $18 in less than 3 days. You're saying, Carter, that's not a big move. That's 18%, and I'll take that any day of the week. So now here, let's look at this again. Stock on an upward trend, sold off down to that 200-day moving average line. Looking at that lower time frame, that hourly chart here, look at this trend. Boom, boom, boom. We had that breakout above it. It tapped that, let's go ahead and look, that 90-day moving average line and that old trend line, the combination of both. Hit it, we had that move going forward. So now what I think we're going to see is a trend form very similar to this, right in this range. So my stop loss will break down our risk management, getting in around here. Stop loss a little bit below that, about 2.8% for a possible push up to resistance. Resistance is in this range right here. We'll go ahead and we'll box it out so you guys can see just natural tendencies of getting selling pressure right about right here. 6-to-1 risk and reward. So that's why having good risk management, and even if we're wrong like 30-40% of the time, or 50-60% of the time, we're still going to make money off these types of trades. So, just about putting in the work, letting this thing ride out, see how the market reacts. It's got a little buying pressure after hours, which is always good, a little more incentive to get some buying pressure. So guys, I hope you guys all enjoyed this. If you learned anything, check out our school, Code Trader. You guys can see it. Code Trader right here for 51% off. Learn to trade. I'll see you guys in there. Sign up with Moomoo, and I hope you guys have a great rest of your day. Take care, everybody, and we'll have a good one.